Congratulations on the results, because I imagine most people referring to them as solid. And it looks like, based on your outlook, it implies it's going to be sustainable despite everything we see in global politics and the global economy. What gives you the confidence, Chuck?
Well, John, thanks for having me on. You know, we had a good quarter. I think the strategy is clearly working. Our product and the innovation we're bringing to our customers as they navigate this multi-cloud world is actually, they're being well received. We saw growth across very balanced across all of our technology areas, and this transition that we talked about, the business model work that we've been doing, is continues to take hold, with our software and subscription business continuing to grow. To your question relative to what's going on, we have a lot of things happening around us right now, for sure. So if you look at our performance, I think we have clearly driven a significant amount of innovation in our portfolio. Our teams have done an amazing job, and at the same time, we've had a very strong, global macroeconomic environment to operate in. And right now, we obviously have some dynamics with the rising dollar. We have, some uncertainty in some of the emerging countries. We've got the trade dynamics. So those are things that we don't necessarily control, so we will have to deal with those as they evolve. But right now, things feel pretty good.
Chuck, we're going to talk about the transition in a little bit more detail in a moment, because clearly it's very successful. The stock's doing well in the pre-market. You bring up the US dollar, and it's something that always interests me. How do you handle that in the C-suite? Is it something you've hedged, or do you just sort of let it rip and it balances out over time?
Well, we've gone through this, at various times over the years, so our teams know how to manage it. We actually have a set of processes that our teams deploy when this begins to occur, and then we typically come out the other side. But it's something that we've dealt with over time, and we'll deal with it again. It's the reality of running a big multinational global business, and so our teams know how to handle it.
So more broadly speaking, I want to understand the pickup that we're seeing in the business. Do you see it related to the strength of balance sheets in general, just rising business confidence, or is something else happening? Are we seeing the spending driven by, say, the modernization of legacy IT systems? Which one is it, Chuck?
John, I think it's both, and I talked about this on our call yesterday. There is clearly a lot of business confidence. There's a lot of economic tailwinds right now, but at the same time, I think the launch that we did last year in our intent-based networking portfolio, the work our teams have done in our collaboration portfolio, the security portfolio, those things are really resonating with our customers. When you look at a Catalyst 9000 that we launched that has a software subscription on top of it, and the fact that it's the fastest ramping product in the history of the company, that says that there's some deep innovation there that's obviously being, bolstered by great economic conditions. So it's a little bit of both, but we'll take both when we get them.
Lift the lid on the conversations you're having with the clients at the moment, Chuck. Give me some insight on what your customers are investing into more generally, and more specifically, what are the areas of lower priority for them at the moment?
Well, if you look at what's happening with our customers, they're undergoing a fundamental shift in that historically they've run their applications in their private data centers. And now they have applications running in their private data centers, but they're consuming SaaS applications, they're consuming services from public cloud providers, and so their networks and how their traffic is flowing is just fundamentally changed, and how they need to deploy security is fundamentally changing. So they're having to rethink their entire IT infrastructure, the architecture, the security, and we're at the heart of how they think about that. So that's a big thing that they're all focused on. How do I drive automation into my technology assets to reduce the cost and drive agility? How do I deliver security in this new world where my traffic is destined for 50 different locations as opposed to my private data center? And these are the things that we're working on with our customers that I think are leading to some of the success we're seeing in our business right now.
Yeah, just seeing the opening bow, Chuck, the stock's going to open up around 4%, I imagine, off the back of these pretty decent results. And clearly the market and investors, analysts, pretty impressed with this transition that you've overseen over the last several years. I want to talk about how M&A has supported that transition internally. Raymond James have been counting since the start of 2016. 19 out of 20 acquisitions were in software companies. Are you done on the acquisition side to support this transition, or is there more to come, Chuck?
Well, we just announced one Duo security that we haven't closed yet. So I would say that, first of all, our teams have done an amazing job delivering on the internal innovation that we built for our customers. But we'll always augment that with great acquisitions like we've done with AppDynamics, like we've done with the Duo acquisition that we announced. So it'll be a combination of the two. We spend billions of dollars on R&D, and where we see an opportunity to pull in technology that helps us deliver on what our customers need from us, we'll continue to use both levers.
Hey, Chuck, just to wrap it up, you and I usually wrap things up by talking about how much cash is still on the balance sheet. Have we seen the bulk of the repatriation story now? Where are cash levels at Cisco?
I think we're in the mid-40s right now in cash. And we've made our commitments relative to our capital strategy around buybacks and dividends, and obviously you've seen us leverage it for M&A. And so we've been very clear about that strategy, and with our great CFO Kelly Kramer, we'll continue to execute against that.